Anyway, so she's a great resource and she does a lot of stuff with VA, FHA. So the intention for me to bring her here is because there's always questions in all of our classes about, well, what about VA? Who pays for what? Who does this? Who does that? What about FHA? What does the inspector look for? You know, and everybody's, because there's all these clouds of uncertainty around a lot of that stuff. So if it's there for you guys as buyer's agents, it's there for listing agents, right? And things are competitive right now. And my thought is if we get rid of some of these potential myths and actually know a little more, we can educate our sellers and listing agents of, hey, you may think this and this is going to be a roadblock, but that's not how it actually works. It's blah, 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 you know, whatever. So that was my intention. I'm going to let you go ahead and take it at this point.
Yeah.
So we have lists. I'm sorry. We had some questions that were posted on Facebook. We're going to stick to those. We'll have question and answer a little later because I don't want us getting off track with a lot of like little individual, this was my situation, things that then leads us to not be able to hit every point that she wants to hit.
Well, yeah, we'll get through like the PowerPoint part, and then I've had this since 2017, so I've updated it. So because guidelines change all the time, rules change, so we'll get through just this. And then I have like a couple links. We were trying to figure out how to pull up the links on the side, but it wasn't working. So at the end, the only real, I can share the PowerPoint so you can get to the links. At the end, there's only one link that I really wanted to do like the tutorial on. So this was originally from 2017 and I started it, and then I switched it. I'm like, good thing I had the right date or the year or whatever. This year has been a little bit crazy, or the last 2 years. So I work for a mortgage broker, Key Mortgage Inc., but I also have Michigan Mortgage Mom license, and I use it for my branding and everything. So it's underneath our brokerage. So the company is Key Mortgage Inc. We're a very small brokerage, and I have an assistant and a processor and a broker, and we're at like 5 Mile Northville Road in an office, but then I also live in South Lyon. So a little bit in the 3 kids, and we'll go through that, but a little bit of a commute. So I'm 50% in the office, 50% at home working. So let's see. And it was funny because this was
brings all those little boxes.
Oh wait, did I do this right? Did I do this right? Sharon, I've already screwed this up.
No, you just press on this.
What?
Okay, hold on.
Already messed
From the
this up.
beginning.
From the beginning. Okay. There, it's gonna change, I think.
What the heck?
We have this. We need IT. It's so funny because I work in a small brokerage, so I'm constantly like IT. Like down the hall, there's no IT.
Why isn't this working? Just
Sure.
go like that.
Well, I did, but it's not going on here.
Hold on. Just click on the side. Sorry, I don't know why it's not. You can also use your fingers.
Breathe out.
I don't know what that does.
But I clicked on this and it's not.
Okay, keep talking. Let me figure this out.
Okay. So obviously you won't see the picture up here, but I've got 3 kids, 4, 12, and 14. My husband works in a school district downriver, so he's not really much involved during the week. So we're all over the place. I changed out that picture from 2017. It was like a very drastic difference. So I'm like, oh my gosh, just time flies. So here's a couple of the logos. I usually use my Michigan Mortgage Mom, but Key Mortgage Inc. is my broker. For a while, years ago, I was part of like a Michigan, like a military mortgage boot camp where I would attend, like before COVID, obviously, I would attend like a lot of like conferences on VA, why to accept a VA offer, and the guidelines. Guidelines change all the time. There's been some that have been eliminated as far as like condos and site condos, because Michigan has a lot of site condos where other states have don't have site condos. So it's very confusing as a whole. Let's see, go to the next page so you don't have to look at me. Oh geez, he's screwing this up. So I briefly talked about like building relationships and trust, and I know with like the online presence and a lot of like the Zillows and, you know, everything, people are, the first thing they do is go online. So it's building that trust and that relationship with our clients. And also like the relationships with our partners. So with, mortgage partners, real estate partners, and I know I'm sure a lot of you already have your mortgage partners, and that's not like really why. I'm just more of like educating. And then if you do have anything that does follow through with like your preferred lender or something, if you ever think of me, like I'm totally willing to jump in and help. Let's see. So pre-qualification versus pre-approval. So a lot of the times what's happening right now is people are going online, getting pre-qualified, like with Chase, Bank of America, big lenders, even, Quicken. So they'll get a pre-qualification letter. So I've had a lot of times, I just had one yesterday, someone came with a Chase pre-qualification. They wanted to put the offer in, the listing agent didn't want to put their pre-qualification letter in with the, multiple offer situation. They asked me to pre-approve him. I got everything and he's not pre-approved. So it's, getting fully pre-approved. We're receiving all of the income documentation, all of the assets. We're running a full credit report. I've been doing this for a long time. As far as I used to process since I was in high school, and I'm 37. And then about 7 years ago, I got licensed and then went to full sales. So I've seen through the crash and everything else. And then I've also seen all of the issues, and I can easily problem solve. If we have problems, I'm like, okay, first thing, tell my assistant, check on the credit report. Do they have authorized user accounts? You can eliminate those from the debt to income. Do they have less than 10 months on an installment loan? You can eliminate that payment. If they're at 12 or 13 months, can they pay it down? So it's constantly problem solving. So getting pre-approved is very important, especially in this market. Knowing what, especially with the guarantees going on right now, knowing the best case scenario and the worst case scenario loan estimate side by side. If you're good with that, then we can put the offer in, because there's no reason to waste your time in doing an appraisal guarantee. Come on.
Oh, it's locked.
It's locked. You locked the door?
No, it locks.
Oh, okay. I'm just kidding. So it's just, it's really important that everyone's aware of best and worst case scenarios. If the appraisal does come in short, this is what you're looking at bringing to closing, so that you're not shocked. And I think a lot of people are just very confused with the guarantees, because it hasn't been really a thing prior to a year from now. Oh, I didn't realize I did this.
Can you go back on the side?
I didn't realize that I can click on that. So I already did that. And then I have my application here. So everything's basically online. So my application link is in my signature line and my emails. A lot of the agents that I work with will just text it to the client. They can fill it out on their phone. They can upload PDFs and everything to the toolbox. We get a notification by text and email that one's come through, and then we are able to pull it through, and it's safe and secure, rather than using just email.
And we'll show you those links after the PowerPoint slide, because it's hard to toggle back and forth between the two, because we're trying to share on Zoom.
So this has changed as far as the different types of loans. So conventional, with COVID, a lot of the lenders, because we're a broker, so we have several different lenders that we work with. Every lender has changed their overlays and their guidelines, especially in the depths of COVID. They really, increased everything. So credit scores increased. They made it very difficult for self-employed clients to get approved, because a lot of companies were shut down. If you were working with a hairstylist or a gym instructor, it was just, exactly. So, a lot of these companies, and we're still seeing it, because now everyone's back to work, but 2020 had a low year. And so we're trying to do COVID letters and working on, the time off and all that. So
I heard that some lenders are going back and even averaging 2019,
22
into it,
yeah,
to account for
Mhm.
gaps in earnings, because of last year.
I've seen that a few times already.
Yeah, and that will be a lot different depending on what their situation is. So I have one client that's a Pilates instructor. Well, 2019, she's been part-time the whole time. 2019, she was very part-time. 2020, the start of 2020, she went back full-time, but then was shut down, and then back to full-time this year. So it's ultra confusing, because now you're trying to average 19, 20 and year to date, and it's still low as far as what she is going to make, but that's how the guidelines.
To the unemployment payments that people got, does that come into play?
No, unemployment. I even had people, when they were getting unemployment, can I use that as income? And I'm like, no. And because a lot of the times what people were getting is more than they were making.
Right.
So it was really difficult. So right now with one of our lenders, the minimum is 620. You know, with the credit scores, it gets a little bit difficult because although someone might be approved with a 620, it might fit the guidelines. With a conventional loan, you also have to get an automated underwriting approval. So this has to get run through either Freddie or Fannie or both. So we run simultaneously, we run the underwriting automated approval through Fannie and Freddie, and it's called DU and LP. So we run through both. And sometimes if the scores are too low and they're putting a minimum of like say 3 or 5% down, they might get a refer, which is not what we need, obviously. So if they don't get a refer, I'm not sure if anyone's come into the situation where you've been on the listing side or even the buyer side, you put in a conventional offer and had to switch to FHA because underwriting wasn't able to get an approval. Does that happen to anyone?
Kim's like, yeah, so she's chewing on a bagel.
So what happens is the lender did not run automated approval before they gave you the pre-approval. So
And it's property specific sometimes, right? A little bit?
it's not really.
No.
So what I'll do is if I know that someone's looking in the range of like say 200,000, they want to put 3% down. If they have a lower credit score, it's automatically a red light for me. So I'm like, you have a low credit score, very minimum down, you don't have reserves. Let's try to even see if we can get this. 9 times out of 10 in this, like the way that the Fannie and Freddie have put it in their system, they're not getting an approved eligible. If you can't get an approved eligible, it's a dead loan. So, and I've even seen like you put 5% down and 10% down, they're still not. If you have a co-signer, typically they like a co-signer. So if someone has like a low credit score, you need a co-signer if you're going to do conventional. So it is minimum 3. This fits the guidelines, but it also has to go through that check of Fannie and Freddie.
So is your recommendation to them, if they have a client and they show up with a pre-approval, is to talk to that lender and say,
Oh, for
have you
sure.
run them through?
Even the listing
automated-
side or the buyer side.
And the listing, like whatever.
So it's contacting that lender, asking them, have you
Specifically
run
asking.
through DU and LP? And using that terminology with any lender, even on the listing side, they're gonna say, okay, this person knows what they're talking about. Like, I really
If you
need to
don't,
look.
Just
Yeah,
say it.
but if
everybody in there.
you're using like mortgage terminology, it's gonna be helpful for them to like really actually look into it instead of just say, yeah, we're all good.
Actually, I have a quick question, if you don't mind.
Yeah.
What is DU and?
What's it stand for?
So DU is direct underwriter and then LP is loan prospector, I think. I don't know.
Okay.
Yeah,
I
so
Even if
heard-
you said-
DU is for Fannie and LP is for Freddie.
So even if you said,
Okay.
have you run this through Fannie and Freddie?
Yeah,
That
Fannie,
as
Freddie,
well,
DU,
though,
LP.
right?
Okay,
So it's,
I have heard other lenders talk about it, but I didn't know that.
yeah, it's good to ask, just because if they have not,
It's a
and
surprise.
if they have not, or if they don't have the capability of running both. So some lenders only use Fannie or some lenders only use Freddie. So if you don't have a lender that uses both, I may get an approval with Fannie and not Freddie.
Right.
So, but vice versa. So if you go to a lender that only uses the one and you're getting a denial, you could really go to another lender if
And they
you
might,
get,
right.
you might get an approval. Let me see.
So did you say DU is a direct underwriting?
For
For
Fannie, it's for Fannie Mae, and then Freddie Mac is LP.
And LP stands for?
We don't remember.
Loan prospector, I think it is.
Okay.
I think. I'm almost positive.
It's not
Yeah, no.
brilliant.
I'll look it up and send that over though, for sure.
Does it need to go through one or the other or both?
So I send it through both because the
They need
other,
to be approved through one of them.
just one.
Okay.
But the other reason I send it through both is when I run them through, I could get approved eligible for both, but Fannie could give me an appraisal waiver and Freddie could give me no appraisal waiver.
Right.
So obviously I'm going to choose the appraisal waiver, but if I'm only running one and I don't get it, I could have ran the other one and got it. And if you have a lender that only uses DU or LP, then you're missing out on
So if you want a lender with this.
yeah. And most brokers will do both. So VA is a lower middle credit score. VA, you can actually do manual underwrites.
So
So,
let's talk about VA to begin with. So
Yeah,
VA is
there's gonna be more.
designed, I would say just describe it.
a VA loan is designed for a veteran. So with the VA loan, there's several different guidelines that go behind it. Someone asked a question, they had a bad situation. So I was gonna briefly like talk about that because there was, vet still works for the Navy, their assignment was in Japan. Is that anyone here?
It was Doug, he's online.
Okay, so, hey Doug, can you hear me?
Yeah, I can hear you.
Was this like an online lender, like a Navy Fed or?
That I don't know because I'm on the listing side.
you
So
have their pre-approval?
yeah, I had the pre-approval. The pre-approval was good, and then all of a sudden we got the clear to close, and so I scheduled the closing for Tuesday this past week, and then the other agent called me back saying after they gave us a clear to close, they went back to the borrower and asked for additional information, and it turns out that her job was technically stationed in Japan, even though she's working here in the US.
Does she have a husband that lives here?
No.
Okay,
So they considered this house, they were going to call this house a second home, which
Right.
then she doesn't qualify for a VA. So she has to go back and get a letter to state that she actually is stationed here in the United States in order for it to be her primary residence.
So the issue with the whole transaction is that the loan officer didn't know what they were doing.
Right.
So they didn't pre-approve the person correctly, because although VA does have guidelines, you have to understand the guidelines before pre-approving someone, so that she should have never been pre-approved in the first place. So most of the time that this is happening, it's happening with the big, huge online VA marketing lenders, which is like Navy Fed, all of the, what's the other one?
You would expect that somebody like Navy Fed would know the guidelines, right? Because it seems like it
But
should be
oh
their
my
business.
gosh, I cannot even tell you how many times that
Okay.
people have been in the process, mid-process, and it completely goes sideways, and I've had
So
to.
what's the recommendation then? What should they
Vetting.
look for in a lender to know that they understand? that
It's
they
just
need to know?
asking the right question.
Should
So
they be certified in something? Should they be?
it's not gonna really, so really, as far as like the listing side's concerned, it's again, is on the VA side or any side really, it's gonna say, you're gonna have to say, are they currently full-time? Do they receive a W-2? Are they self-employed? Were they affected by COVID? Like, you're gonna ask a lot of questions like that are going to affect the approval. So the problem with using like an online lender like that is that if, shit hits the fan, they're in California, they don't, they're just not gonna answer the phone.
Right.
You can't like walk into their office and,
That's
say
how-
like, hey, what's going on? Like, is there anything I can help with? Like, when you're working with someone local, they're definitely gonna try to work for you and with you. And when you're working with an online lender, you're basically just, one of the thousands of people in their pod. And then you really aren't even working with the person on, the pre-approval. So that's the issue with, I mean, and I hate that it like kind of puts that like stigma on VA loans, because, with a VA loan, it's like, they're so much easier to get through underwriting when they fit the guidelines. The credit scores, like the
So that's the kind of stuff
statistics,
we wanna
they're
talk
in,
about.
they're in like other slides. So FHA, same thing with, minimum credit score is lower, down payment is 3.5%. The debt to income ratios can be higher than like Fannie Freddie guidelines. So with FHA, that's why you'll see a lot of conventional, if they're putting 3 and 5% down, that don't get approved conventional, reverts over to FHA. The downfall of FHA is that appraisal sticking to the property. So if it does come in low, it's stuck on that
Do you guys
property.
understand that?
But that's only for other FHA loans.
Right.
Correct.
So if you relisted, you couldn't put it,
For
so
3 months, because it used to be
It's 9
6, I think it's 3
yeah,
months.
3. So you couldn't relist it with FHA financing. Um,
So that's why listing agents are scared of it. Because if it comes in below appraisal, they can't sell to another FHA person for 3 or 4 months,
yeah.
because that appraisal's on the books. And it's.
Although I feel bad because I have a couple FHA clients that are in process right now, and they do have their offers accepted and their appraisals are fine. They're coming back at full value and we have no issues.
Yeah.
So
But that's a misconception again. right?
it's another
But it's-
misconception. It's like, I
Or not a
don't,
misconception, but a concern.
but I don't see like a fault in accepting FHA,
Because of
unless
that.
you're seeing like mold or peeling paint or huge
Condition
drastic
issues.
cracks, or there's no handrail, or the basement stairs, that
So is
doesn't
that
have a
on another
handrail.
slide?
Mhm.
Okay, let's keep
Sorry.
going, because.
And
those are all questions
USDA,
that people
so
have, right?
USDA is very similar, 0% down. There is minimal mortgage insurance. And the other question on VA, I'm sorry, I skipped this. There's no monthly mortgage insurance.
Okay.
There is a funding fee if there is a funding fee depending on their eligibility. So that's on another slide too.
USDA, I'm not.
USDA is gonna be more of like rural
Got it.
areas. So we're not really like in a very rural area. I know that like the Brighton office, they do a lot more USDA and stuff out that
Does
way.
FHA require mortgage insurance?
Yes, and it's fixed at 0.85%, whereas like conventional can be down to like 0.21, so it's drastically higher. And there's also upfront at 1.75 that's rolled into the mortgage. So they're adding that 1.75 plus that monthly to be able to get into house in this kind of market. They might have to do it. Did someone say anything on here? I couldn't hear.
Non-conforming, or did you already?
Oh,
Hey Kelly?
Yes.
I'm sorry.
that's okay.
With, trying to remember this, is it with conventional, the PMI goes away if,
At 70, it will eventually drop off at 78% loan to value.
Okay.
If the client feels at some point that they have the equity, they can always call their servicer and say, like, I feel like I have 80% or 20% equity. Can you reassess and drop off my mortgage insurance? 9 times out of 10, you're going to be sending the servicing company to do an appraisal. It's probably not going to come in at what they anticipate it to, unless they have like, they can utilize their agent to supply comps and stuff like that to give to the appraiser. But it's going to be like the mortgage servicing company's appraiser that comes out that does the assessment of the value, and then they can redo it. You can also do something called a recast. I don't know if anyone's done that, when you have someone selling a house and then buying. They want to buy first and then sell. They take the equity and then recast or re-amortize that payment. That can also drop it off. But you have to make 3 mortgage payments.
That's too much detail right now.
Okay. Okay.
I will state on that though.
Correct. It
You can
used
have
to.
2 VA loans at the same time, right?
VA, yes, you can. Oh, it will be
What
on
was the
another
question?
slide.
Oh, okay.
I have it on a slide coming up. Sorry. Oh, shoot. Okay.
So, quick question. Good morning,
Yeah.
guys. Are VA loans reusable? Is it a one-time thing, or if they sell that home and want to use it again, can they use it again?
You can definitely use your eligibility again. There's something called bonus entitlement. So you have your entitlement, and then you can also have bonus entitlement, and there's a whole calculation to that, but you're gonna want a lender to do it. I think it's on one of my slides. But you basically need to have the veteran pull their certificate of eligibility. You need to find out what that amount is.
Are you usually only allowed to use it one time?
No, you can use that.
No, but was that the question?
She's wondering if you could use it again.
Right.
Yeah. So the 3 most important questions, like when you're talking to a veteran, first of all, to even ask if someone is a veteran, you or your spouse. So if I was dating someone that was a vet, and he was a vet and I am not, and we're dating, we're not married, we could not be on the same loan together. I couldn't be a co-signer. So you either need to be
Married.
correct. You either need to be a
Okay.
spouse, or you both need to be veterans. So then you would share your
Good
entitlement.
detail.
And it can't be like a parent or
Nope.
it has to be spouse.
No, but you can have 2 veterans on a loan, but you can't use a co-signer that's not a spouse. The VA loan is to get families into homes, and that's like what the main rule is. So it's, are you or your spouse a veteran? Are you entitled to disability? The reason that we ask that, and it's not to like, be pushy. If you receive disability of any type, then you have 0% funding fee. So that means you have no funding fee added to the loan. If you do not, then you have a funding fee depending on your rank and depending on your use. So if you've used it before, the funding fee goes up. And then the other one is, do you have your certificate of eligibility? If you don't have it, if I went into the VA portal and ran a certificate of eligibility and I didn't get it automated, the VA would ask me to send in their DD-214. So the DD-214 is what the veteran receives when they're discharged.
Okay.
If they misplace that, it's going to be 30 to 60 days to get that from the VA. It's a process. So if they don't have that physically, to be, for you
Don't
as a
start looking for
lender,
house until they
do
have it.
not start looking for it because you could be very messed up in the process.
Yeah.
So if they don't physically have the DD 214, they don't have your certificate of eligibility, the lender hasn't run it yet. They shouldn't have, number one, they shouldn't be giving a pre-approval without the certificate of eligibility. That's like number one. But the veteran can also pull their certificate of eligibility, but it like 50% of the time it's not automated. So we have to request it from the VA, and the only way to do that is to be able to send in that DD 214. So it's just the discharge form that they receive when they're discharged.
Just so you know, it just took us 4 months to get it.
Probably because of COVID, right? Like everything is like,
Yeah.
because of COVID, like it's, you know,
That's the excuse now for everybody.
Oh, yeah.
So, it's been an excuse in 3 years.
Yeah.
We're still backed up from COVID.
well, it's just a lack of people, bodies.
Sure.
So
So can you not be active military?
you can be retired.
That's discharged.
Yeah,
Mhm.
if you're
Yep.
I
discharged.
mean,
If you're
but can you
discharged,
be
you gotta-
active military?
And get a VA.
It depends on
Oh,
how
I see.
many
'Cause, like,
hours,
Doug's
like,
person, right, is obviously active if they have a position in Japan.
Right.
right, but there has to be, so the main rule with like, if you're out of the country, you're using your VA eligibility to purchase a house for your family. So if you don't have a family here that
Right,
needs
right.
to be housed here and you're working out of the country, like if you said it was a lady, Doug?
Yes.
So if she had a husband here that was working here and kids here, then that'd be a
She's
whole
housing
different
her family.
situation.
Yeah, right.
Gotcha.
If you're active military, you wouldn't have your
Discharged.
DD 214.
Right.
Yeah, so you would have to just supply like your hours and there's like,
Proof of
there's
being
different
active.
forms.
Okay.
Okay, so, this sheet I think is in your
Yes.
form. This is part of my VA pre-approvals. So I have a third page to my pre-approval that I send with my pre-approval that basically says like, thank you for your service. This is why you should accept a VA offer. And then it goes with my pre-approval though.
So let's look at it real quick. So easier underwriting.
And they have no little to no overlays.
What
So
does that mean?
overlays, every lender has different overlays. So the overlays just like skyrocketed during COVID because all
Are
the
they just
lenders were,
fees?
no, like
What is it?
rules.
Oh, rules.
So they
Okay.
could say if like during COVID, a rule could have been if you're self-employed, you have to have 6 months reserves in your account.
Employment verification.
Right, there was
That's
several
started
input.
happening.
So that's a little bit different, but like overlays would say, a lender could say, well, the VA doesn't have a minimum credit score, but lenders do. So a lender's overlay might say it needs to be 600 or 620, but we have lenders that go down to 580. So that's like an overlay. So
Okay.
there are just extra rules that individual lenders put on there. So zero down doesn't mean that they're not as good of a buyer. So 9 times out of 10, when I'm getting a VA pre-approval, the credit scores are excellent. They have reserves. They're very disciplined. So people think, oh, they don't have any money to put down. Well, they do. They just don't need to.
They just want to
Because
use the benefit.
I mean, yeah, the benefit that they deserve. So,
They can use it for appraisal guarantee.
right, they can use an
Yeah.
appraisal guarantee too.
So
So a couple things here about the appraisal process. The VA on the mortgage end, and that you should know, is that it's the easiest appraisal process getting through a VA appraisal. When the appraiser goes out, number one, they work for the VA, so you don't have a management company like overseeing this. So the VA appraisers work for the VA. They only do VA appraisals. When the VA appraiser goes out, and then they come back and they're like, shoot, we don't see the value here. Like we see the purchase price, 300,000. We're pulling comps at like 250, 260. What they'll do is they'll call Tidewater. And what will happen is they'll send us an email.
Tidewater's like a label. It's not
Mhm.
calling the place.
Yep.
It's- They're labeling it Tidewater.
So the appraiser will contact us directly, which never happened since, 1999. No, and we'll say, okay. And then what we'll do is we'll contact the agents and we'll say, VA called Tidewater, please supply us your best comps, what you use to price this loan, and every update, anything that you can to bring this house in that value.
So you, in essence,
Or
have
helping.
the opportunity to appeal a low appraisal before it's officially a low appraisal.
Right.
Like, you have the chance to influence the appraisal.
They
value.
want to help the
They wanna
veteran.
get these
They want to
vets
get the
in.
vets in the houses.
So what happens when that doesn't happen?
Then you have, so
When
there's
what-
two
when
parts
you
to
When
it.
the,
Justify
no,
it?
when the appraiser doesn't go through all those avenues.
Oh, we'll talk about that. That's a whole nother.
That's a whole
Ball
other,
wax.
I mean, okay.
So
Becomes
no.
Is that like is that a standard or is that an option that?
These are the only guys that come back and let you influence it.
Veteran.
So
That's what
that's,
I'm
you
saying,
mean a
like-
rebuttal? You're saying if the
Like,
VA appraiser doesn't?
If the VA appraiser came out and doesn't go through Tidewater and gets back to you and.
Says we're not
says
making any
it's
change.
Too low.
Will they still
what
say it's
happens?
low? Then
Yeah.
there's a second.
What could have happened, I guess, is, or what, if it comes back and you're just told it's low.
So then you have the reconsideration of value. So they call Tidewater, you supply comparable sales, you supply whatever you're gonna supply. They come back and it's still low. Then you're still unsatisfied. You then you can officially like put in the ROV. So it's a 3-week turn time though, but this is like basically a rebuttal.
So those are the two additional options that you put.
Well, yeah,
here.
so on a conventional FHA,
Right,
USDA,
it is what it is.
you're like, okay, here's your appraisal, it's terrible. Okay, here's a rebuttal, and that's it.
And they usually don't change it
Yeah, I mean,
unless you really have some.
to be honest with you, like worst case scenario, if I get like a really bad appraisal and I'm like, this is terrible, like I'll just throw it away and like order another one. If I know it's really
Yeah.
bad and I'm like, they're not going to do anything and we don't have time to waste, we'll just order another one. Which is an advantage of a broker. So we used to be a branch of a lender. If you ordered an appraisal through them, that's your appraisal. It's stuck, so you're moving on.
To get a new appraisal, you have to switch lenders. You can't just order a new appraisal. So
Yeah,
because they're a broker, they service many lenders. So you can jump from
and we have,
UWM to Quicken or whatever you want and get a new appraisal, which is
Right.
more the other way.
Yeah.
so,
All right.
so this is just basically what's in there, and then it just says
VA loans are more valuable to lenders for, what was that?
they're guaranteed, whereas like if you defaulted on a conventional loan, the lender's out. So the VA backs the VA loan
So why does that matter to a seller?
to a lender. Because the
Why
lender,
should a seller accept a VA?
but the lender is gonna work harder to get that loan passed through underwriting and
Got it.
approved because they have it
They're
backed
more
by the VA.
vested in
Mhm.
it.
They'll get their money no matter what.
Right. So, and basically it's the greatest way to honor a veteran, saying thank you for your service. I mean, that's basically like what I've come to see is like a veteran just wants to be in a solid location. They want their home, they've been traveling and, deployed, and they just want their family to be, so. Okay, so this is the multiple VA loan question. You have your basic entitlement and then you have your bonus entitlement. So I have a client that has a VA loan right now and it lives in Livonia. They want to sell their house and buy a new house. They're going to buy first and then sell because they're going to be able to use their bonus entitlement. It's a whole calculation and it really just depends on what their entitlement is on their certificate of eligibility. So again, like the number one thing, so you get that certificate of eligibility. That's
Is
the
it your
number
rank
one
and all
question.
that kind of stuff?
Well, it's basically saying that you're approved. Like
No, but I mean, the bonus depends on how long.
The
you've been
bonus
in and
entitlement?
all that kind of
No,
stuff.
it's just to see like what your entitlement was on your eligibility. So it depends on like your service and
Depends on
then,
that, yeah.
and then if you have another loan and whatever, there's like a whole,
I have a question.
it's typically 36,000. So there's like,
So when you say they get 36,000, does that mean forgiven off their loan? What does that mean? They get
no, it's
36,000?
a calculation. I think it's in one of these things. So so basically it depends on the county. So there's so many different calculations. So you have to go by county and
Okay.
then like what they currently have, but your lender can like calculate it all out for you.
But I'm sorry, back to Sharon's point.
Yeah.
What does it mean?
What do they get? Is it off of
36,000?
fees or off of what?
36,000 is like, I wish I had printed a certificate of eligibility. So basically you're taking 36,000 times 4. Let me see.
To determine how much of a house that you buy.
Yeah, and so like they have to, basically, it's kind of weird
In qualification.
Their certification.
what the VA is
eligibility
allowing them
say.
to use. So sometimes, like, if they don't have enough eligibility left, they might have to put a down payment down if they currently have a loan.
Okay.
So that's,
It's
yeah,
not
it's,
in actual cash. it's in
no,
actual
no, it's just how
Got
much
it.
their max
Okay.
allowed.
Okay.
So this is kind of just the statistics, pulled based on like why do lenders like to see VA loans over conventional and FHA. So this is just performance on repayment. And then the guarantee coverage with VA versus Fannie and Freddie and
So VA
FHA.
clients don't default much.
No.
Right.
Yeah, you'll see their
Thanks.
performance over there.
Huh.
Let's see, and then the overlays too. I mean, Jarvis and I did one a couple years ago, and the credit scores were low because they both gone through divorce situations and whatever the case may be. He was an Army vet. They were with Navy Fed 75% of the way through the process. They completely dropped the ball, didn't answer the phone. We came in, got it closed in 2 weeks, and did a manual underwrite. So VA allows manual underwrite. You don't have to go through DU and LP's, system. So since then they've been, increasing their credit scores. We just did an EARL, which is a streamlined refinance with like no income, no appraisal, nothing,
So
and
basically,
saved them a ton.
everybody involved in the transaction has an interest in really pushing this and making it go through.
Right,
So it's actually almost kind of more of a sure thing.
right. And this is one of the
in a way,
main
it
things.
Sounds like.
Everyone's concerned about the pest inspection, the well and septic pet inspection, the cost. The VA does not, he just wants to look at us.
No, he's making fun of me because I was like,
Oh.
come in.
So the only time that the veteran cannot pay for these fees is if they are being charged a 1% origination fee, which is like very
Say
unlikely.
that again?
The only time that a veteran cannot pay these fees if they're being charged a 1% origination
So if
fee.
they're not being charged origination,
Which is
they can pay
unlikely.
for all that stuff.
Exactly. And honestly, I always pay for the pest inspection, so it doesn't even
You
matter.
do good.
Yeah, but I
They
always
didn't pay
have-
for hers.
Wait a minute, so
I'm
let's say that
about to do
again.
one for mine.
Because my understanding was they do not pay for the pest inspection, but you're saying
They can,
they can.
as long as they're not being
Depends
charged
on their
1% origination.
So you just have to go back to the lender and say,
find
are
out.
they being charged this?
1% origination.
Yeah.
Yeah, and then also if
That's a big
you
deal to know
ask
that.
your inspector, like your home inspector, if they're certified to do pest. Because if they are and they include it in their invoice,
No, it's
then
rolled in.
it doesn't even matter.
Is that a new
Ah.
change?
No.
Interesting.
She's like, where's Pete? Oh, he walked away. He was eating a candy bar.
A candy bar.
Yes, a little Kit Kat or something.
So this, again, we kind of already went through this. The fact that the staff reviewer works for the VA. They don't have like a third party management company. I'm not ordering it through class appraisal or appraisal vendor, which I would have to in any other situation. And then we talked about Tidewater. And then the other thing with Tidewater is you only have 48 hours. So if they call Tidewater, your lender needs to be on it because they need to get with you and they need to say, you got 48 hours. Well, I would say 24 just to make sure it comes through. And then you have to submit that because if you don't and you miss the boat, they're going to come in with whatever value. If someone misses that, they're coming with whatever value and then you're going to have to do the ROV and it's going to take 3 weeks.
So
plus with COVID.
my VA inspection experience as the listing agent was the guy came in, he was super cool. It was in Rosedale Gardens, their old house, and it needed, the bathroom vent needed to be connected to something and it needed smoke detector in the basement. He comes outside and he says to me,
Just take a picture of it.
just do it, take a picture of it and text it to me or else
Yeah.
we have to pay to come back up. And I was like,
They're like all the
we took a
VA
couple
appraisers.
pictures, I texted him, he's like, thank you, rubber stamp, bam, it was done.
So when the economy was like tanked like years ago, I had my aunt's neighbor was an appraiser and he's like, they were ready to lose their house. And I was like, why don't you go to the VA and get your license to do just VA appraisals? And he's like, what do you mean? Well, how do I do that? So I got him in touch with someone, a VA appraiser. And since then he has been like, his wife's a real estate agent and she sends me like every single client. She's like, I don't know, because they have a lot of business. They do, the VA is very busy and they really take care of their people.
Nice.
So,
So I got a
and
quick
they're
question.
nice.
So it sounds like, you're saying that there's all these things that are in-house and things are gonna go quick, then why does it always take 45 days to close on a VA versus 30 days?
It's just your lender.
Okay.
Yeah, it's not the VA because the VA just guarantees the loan. Your lender is the one that processes it.
But
Well,
listing
it's
agents
right now,
think
so
that
30
extra
days.
inspection
It's
is gonna
just
like take
myths.
a week
Yeah,
or
so
something
those
like
are the
that.
myths,
Yeah.
right?
Yeah,
You
it's
dispel those.
it's honestly just the lender. We're closing VA loans faster than we're closing conventional and FHA.
All right, interesting. Thank you.
My VA lender said they do it in 30 to 35 days at most.
Perfect.
Yeah. Oh,
When
sorry.
when you were talking about the fees, unallowable and allowable,
Mhm. Did something
our
happen?
brokerage,
Uh-huh.
like our compliance fee,
Oh, you cannot pay they cannot pay a compliance fee on the closing disclosure. They can pay it directly to the brokerage, but they cannot pay it on the closing disclosure. So the
Okay.
compliance fee is the
Oh,
one
okay,
thing
so
that
there's a
cannot be
loop there.
charged.
There you go. Right.
Yes,
And
there is a
that-
loop.
they just
They
have
can
to
pay
write
it
a
directly to you.
That's a great.
It's a killer
But
one.
how
too.
do you-
Yep.
How do you do that and stay within the rest of the guidelines?
Because it's still a compliance. We're not
Yeah, the
paying
VA
off
allows
them.
them to pay it. You can
It's
just
like
not
a
pay
quid
it.
pro quo thing. It just can't be on the phone.
Interesting.
Okay, so this is just basic, but I mean, you're gonna have the EMD, the termite, or well and septic, depending on the VA has that. So that is one thing too. Termites always required. Well and septic, if they have a well and septic, it needs to be inspected, and a water test. I should put a water test in there. The appraisal. So on the appraisal, 9 times out of 10, I just pay for the appraisal and then get reimbursed at closing because it's kind of a process to like order the appraisal, send the invoice to the client, have them pay it, then, then it goes back to the management company and then they get, assigned. So if you're in like a time crunch, it's just easier for me to order and pay and then just get reimbursed.
I do have a quick question on that note with the appraisal. Is it always that the appraisal for a VA loan needs to be paid up front?
No, it's actually paid at closing only. They invoice just like old school.
Okay,
Like they
'cause
literally send
I
us an
haven't-
invoice.
The lender I'm working with right now on a VA deal says the appraisal needs to be paid before.
That's because it's the lender that needs to collect it to cover themselves if they don't close it.
Okay, so.
Yeah.
that's
Yeah, we get an
lender
invoice.
specific,
Yeah, it's gonna be lender specific.
because I found that curious as well when they told me, oh, you have to pay for it first. I'm like.
Yeah, I've had like a couple that like,
Yeah.
I've had a couple that we've paid for and then like the seller backed out and it was like $450. But I'm like, you know what? It's like the cost of doing business and they were gonna buy another house. So it's like whatever. But I mean, I have like a couple a year that just go out the window, but it's just the cost of doing business.
And just
So
to
then-
confirm, the well septic can be charged back to them as long as they don't pay the 1%.
Correct.
and that.
All of those fees. Yeah, well and
They have to
septic
have one.
inspection and water tests have to be done if you have a well and septic. And it's again because they're families and they want to make sure the house is safe and sound for the families. Closing costs, escrow, private home inspection, and appraisal guarantee if they have one. So again, I go through this with clients ahead of time. The only out-of-pocket expense that you're going to have is their private home inspection. So, when I send the loan estimate, it includes everything but the private home inspection. So when we're going through it ahead of time, they know like basically almost to the penny what they're going to be bringing in closing. And condo fees. So if it is a condo, then there might be fees associated with the condominium, probably in the bylaws with title company or whatever. It depends, like we know like Harriman and like there's a few that we already know what the fees are, or if we've already ordered another file, we'll just pull it from that other file. But that's like a cost that will be associated. So if it is a condo and I'm like, I don't know what the fees are for this condominium, I like explain to them that that's the case.
Sorry, if they're doing well and septic, but it's in an area where the seller has to do it before listing,
Well, that
is that acceptable?
I have not.
like Wayne County,
Uh-huh.
it's required for the septic.
SIVO.
Yep, for a CVO. So the seller is usually already doing that.
Mhm.
Would that
I think
count?
that's fine. Let me just double check on that, but I'm almost positive that that's fine.
It's the county that.
It just depends on the
The
city.
county is by county to require it.
Right.
Okay. I'm answer to that for sure and send it out.
I mean, just because the county requires it, it's the seller that usually pays for it.
And
before
it
the
already
county
has it.
lists it, right? Because
Right.
That's only septic though, they don't require a well. Wayne County doesn't,
Oh,
they require stuff, anyway, sorry.
No, that's okay. So this is just like a brief overview of how to read a loan estimate. And like, obviously you're not gonna be reading these on all their clients. Like you're not, like the lender's not like, here's your client's loan estimate.
No, right.
But so I don't want to like go into like full detail, but like as far as like what I do is with COVID and especially like everyone lives everywhere, I do a BombBomb video, I do a screen share, and I send this loan estimate to them. I literally go from like top to bottom, like down every single line, explain what everything is, what their cash to close is. I go over like property taxes, everything in this video, and I send it out to them before, you know, they put an offer in or whatever the case may be. And I get notifications when they open and watch it, and they'll watch it 30 times throughout the transaction. So for me, it helps like save me like all the phone calls and stuff because they just go back to this and figure out what their questions are.
You said you do a whole video?
It's called the BombBomb video. It's like a screen share. No,
It's,
BombBomb.
Like,
It's a subscription
Yeah.
service that allows you to make videos that are small in size, so you can embed them in email and text.
Oh, that's.
Yeah, so like my face is like in the bottom corner, and then like I'm like, and I always start like you can start it like full, and every time I'm like, oh no. So I start in the bottom corner. I'm like, here's your loan estimate.
literally like,
So just going through that, like I kind of go over like the sales price, the down payment, the rate that day because they're changing every day. If they have mortgage insurance, they don't have an escrow, this total cost, but also includes escrow and everything. This is their bottom line to closing. And then I kind of go through every single box. So, you know, their box here, this is a new build. So they're paying the transfer tax. So an owner's policy. So transfer tax and owner's policy, it's a new build, it's in your contract. I also include like the HOA stuff here. This one didn't have a, what do you call it? Compliance fee, but I would put that in there too. So this is just like a breakdown of like their costs and like where it comes from, their deposit, what they put on the new build, and this is their estimated cash to close. And the third page, which is just like a bunch of like, you know, numbers, but at the top and the third page is the initial loan estimate and then the final. And then what I initially estimated them to bring to closing and the final. And like 9 times out of 10, I'm like almost to the penny because I process. So like, I'm very like adamant that all these numbers are very similar to the end of the process. What was that? I'm sorry. Someone say something.
These numbers combined with, or at least whatever, compared with the numbers that the title company puts together with prorated taxes and all that kind of stuff is how your client gets that final number of what.
And your real estate closing disclosure is not the mortgage closing disclosure. So I've had some like agents send the client the real estate disclosure, like the closing disclosure, and like they go and get their check or something like, oh no, that's not the final. Like that's not just the real estate cost.
Sometimes it is, if the lender and the title company are working together and telling each other what everything is, sometimes it's at the bottom, but not usually.
Yeah, it won't be probably exact. And sometimes like title companies, like because they're working with a like the listing agent's title company, it changes like 5 times. They'll say, oh, this is your final. And then they'll go back to Robin and say, oh, never mind, we forgot this, or, you know, so it's constantly changing until like the last minute. But like basically what I do is I, you know, set up, this adjustments and other credits. This is the tax proration. So I figure out what the taxes are, when they're estimated to close, figure out the tax prorations to pay the seller back for taxes that they've already paid in advance. I already had the closing fees with the title companies, and this is calculated, the title insurance is calculated by the loan amount. And then I pulled all the little fees based off of the contract. So especially with new builds, you just have to be really careful on new builds because with the cost of like building right now, 9 times out of 10 or even more, probably 10 out of 10, the sellers, the builders are requiring all of the buyers to pay the owner's policy and transfer tax.
Do VAs cover new builds?
Yeah.
Just the builder does that?
It's the end loan. It's just an end loan.
Yeah,
So
if the builder lets you have a
yes.
regular mortgage, then yes, they would.
So years ago, a site condo was
Yep.
considered a condo by the VA. So you had to like get the condo approved. And I did have,
It didn't exist.
well, they weren't like condos. So the issue is that a new build has a phase, like say they have phase 1, you have to have a certain percentage of that phase to be done to get approved. So like back in the day, I had one that was at like Navy Fed, and they were all the way at the end. They had a huge deposit in with a little builder, so he had no idea. And an agent called me and she's like, oh my gosh, my client's ready to lose his house. Like maybe Fed said that they can't get it approved because it's a site condo and it's considered a condo in the VA's eyes, which has changed since then. So what I did was I hired an attorney, went in and had the builder phase out phase one
Oh my God, how
On
long
the-
did that take?
a day. They just did like an addendum to the bylaws. They phased out phase one. I sent it to the VA and you can easily
Do you
call.
have that client's like,
Oh, yeah.
service for life?
Oh yeah.
So-
Yeah. And it was like $1,000, but it was like a $500,000 new build. And so he phased out phase one and the builder didn't care. He's like, I don't care what phase this is. He phased it out. All the attorney did was like a one piece of paper for $1,000. And I was like, okay. And then they phased it out. I sent it to the VA and in like hours they had it approved. And it's still on the condo approval list, but now it doesn't matter. So now I also get condos approved all the time through the VA. So if you ever have a client that wants a condo in a specific unit, it's very easy to get them approved.
So Kelly saved my ass, or my client's ass, in the middle of COVID last year. Brian Smith,
Oh.
because he needed some verification with a form from the IRS. Everything was shut down. You couldn't call IRS. It was March, April. It was right when everything shut down. He was trying to get in through all the phone lines and it kept telling him he had the wrong passwords and the wrong phone number. And he's like, I know what my phone number is. I don't know how. Kelly calls me one day. And
Where's my refund?
she goes,
That's what it was.
she goes, I figured it out. There was a typo
Oh,
on the
I remember.
IRS form
Mhm.
that was filed 2 years prior. So the IRS had a different phone number in there. And she found it by combing through through his tax returns.
And they accepted that where's my refund thing because if the IRS isn't getting your 4506T process through the IRS, that a lender needs to verify that like your W-2s and your tax returns are the ones that were filed. There's a way to go to the IRS and just say, where's my refund?
Right.
And you can put your last 4 of your social security
But
number
he
in
didn't
there.
Get it. That's the
Yeah.
problem.
Well, I think we figured it out
Because the
based
phone
on that phone
was
number.
wrong.
And then you can put in your exact refund and then it will like just pop up this thing, like you have been verified. And if you have that, the lender should take that.
They'll use it as a verification.
Yeah.
Anyway, sorry, I just had to say that. She said that about me. I was like, oh my God.
So this is the future property taxes. So this is one thing, this is so old, 2017. So it was like, this is one thing that I always like get nervous about with buyers buying houses at the top of their price range. So, you know, I need my price range to be around $1,200 a month with taxes, insurance and everything. Like, okay, well, that will start your payment if you want an escrow account, but your property taxes are going to change once you buy the house. So the one thing I do a lot of education on is future property taxes. So I did it's a terrible YouTube video, but I did a YouTube video, a screen share with Bomb, kind of like going over how to calculate it so that you're not doing it for them on every single property, that they know how to do it. So you're at least giving them the information. If they choose not to do it, then they chose not to do it, but you give them the information. I just kind of pointed this out. So someone posted in All Things Livonia or something
The
about.
city of Novi gave me this.
Oh, that's
Because
good.
they have so many people that come to the
Like
assessor
complaining.
that their taxes are not.
Well, and especially think about it right now, property values right now are skyrocketing.
Grandma lived there since 1980.
Yeah, and they're like, oh, I like those
Taxes
taxes.
are
I'm
gonna
like,
be
they're not
way
gonna stay
higher.
like that.
Right,
So she just said, someone, it's probably, so she just said that her taxes increased, the escrow.
79 comments.
Yeah. So all this, we just had this happen, us too, it's just so frustrating. No one
They're
knew.
not educated.
But they're not educated. So the main thing that I do is I send my YouTube video explaining how to figure them out. And I also send the link for the Michigan Property Tax Estimator. So I explain that the sales price that they're looking at is approximately 50 or 60% of that is going to be their new state equalized value. So they'll throw that in there. You're going to pick the county, the city, and the school district. And then it's going to pop out two numbers. It's going to say, and I'll show you at the end because I don't know how to do this.
Okay.
It's going to say homesteaded taxes, non-homesteaded taxes.
Here's the thing
all the time.
We've shared that property
Yeah,
It's only
estimator before.
2019 is the most recent.
right. It's very similar, but you'll
But it's
at least
close,
get like
you're
a,
right.
a rough
It
estimate.
should
I don't
be.
know.
Yeah.
It's part of the state. It
It's
should
probably
be
because of
updated.
COVID.
I
Yeah,
do that, or I
yeah.
just tell my buyers, call the city, if you want to know what your taxes are, call the city, they're gonna be the ones that are charging you.
Just find out
Right.
what the mills are. Yeah, it's easy.
Just go right to the source.
Right. Yeah. As long as you're like letting them know and educating that
Correct.
that's what's going to happen.
Correct.
That way they're not going to come back later.
A
'Cause-
mistake that's off by a few $100s is different than a mistake that's off by tens of thousands of dollars.
Right.
Right.
And so another agent here and I had a client that we did explain it. They were a very young couple, like she was having a baby. We explained it several times, never put in an email, but explained it several times, both of us. And later on they had an escrow shortage and he's like, what's going on? I was like, oh, that's we told you that your property taxes are gonna go up. And he's like, oh my gosh. He had no idea. But then she called him and he was like, oh, I remember that conversation. But so now I kind of just put it all in email. It's like one of those like,
CYA.
yeah, exactly. It's one of those things. And they have it for reference. So they're not asking me on every house, like, hey, what do you think the taxes are going to be in this house? And I'm like, just figure it out. So at least and then they know what they're doing. So, I mean, this is all you guys anyways. I had this in here like years ago. So, but yeah, I mean, you guys already know all this. So, oh, I saw this on Lab Coats the other day and I thought it was like pretty interesting because they kind of like went through two offers. And one of the loan officer was with a local bank or local mortgage company or broker or whoever, and the other one was like an 800 number. And she basically went through it and said we had multiple offers. You know, this is the situation that happened with a local person. They answered. The guy called in 20 minutes from his phone. He gave them all the information, strong credit, plenty of cash, blah blah blah. Offered 800 number, got thrown in like the mix, didn't call back till later, and like said that they couldn't give any information. So she just wrote at the end, any guess which buyer got the house. So, I mean, I had one over on Father's Day. It was like highest and best at 3 o'clock on Father's Day when I was hosting everyone. I'm like, why did you put this on Father's Day? So she wanted to put an offer in. It was like 1 o'clock in the afternoon. I plugged in all the numbers, ran it through DU and LP, and I got an appraisal waiver with both. So I called the listing agent. I'm like, we have an appraisal waiver with both. Like, obviously, I always say, we have a waiver right now. If it goes through the end of the loan, we'll continue to the waiver. I've never had this happen before, knock on wood, but it could always like drop off for whatever reason. If something happens, like, I don't know what.
The company changes those.
We'll say the address was like wrong or something. I
Yeah.
made like a fax mistake, or say that the buyer didn't want to put 20% down and wanted to put 10. It could throw off the waiver.
Yeah.
Hasn't happened before, but could happen. So I always like say that disclaimer, but I said, initially I have the waiver at the full ask price that they're putting in. That's a huge plus for a seller to accept that offer if they're trying to push through that. I mean, we'll get it.
So I
cleared
have
in a week.
asked some questions like that, and I've gotten this answer a couple times. Well, we won't know that until it's an actual live loan with a property address, like submit.
Well, this one
I'm saying
had,
when I'm trying to, let's say I have multiple offers
uh-huh.
and like I have.
You're the
a buyer.
listing side.
Well, regardless,
If there's a property, they can run it through.
I'm trying to remember who it was. It was one of my listings, and I called this guy and I was like, can you get an appraisal waiver on this? Because that would put you over the top, right?
Right.
We can't do that
Oh, yes,
until
I
it's
can.
an actual bottom line contract, like it's a live. And I was like,
Maybe
okay,
if
I've never heard that.
their lender won't allow them to push it through, but I can log in on my
So
phone
it's
and
not
do
a
it.
Freddie Fannie type rule.
Oh,
You
no.
can- Okay. all
No,
right.
I run
So that's a
multiple
lender
houses all the
thing. It's like,
time.
you're being lazy if you won't.
Well, or their
you're not allowed
system,
to, but-
yeah, if their
Well,
system
if
doesn't
you're not
allow
allowed
them
then
to.
maybe you should go with somebody else who can, right?
Right.
'Cause you're gonna lose your
Because it's
Yeah.
huge, because I've had like,
Yeah.
during this heightened time, I've had 3 appraisal waivers in like the last month.
That'll win it.
Yeah,
Yeah.
well, and
Or-
it's like saving money
If you have an appraisal waiver, your client can guarantee
that they have the value
a
there.
bajillion cash guarantee on the appraisal because you know you're waived it anyway. They're not gonna spend it.
Right.
Yeah.
Well,
You know what I'm saying?
and an appraisal is one person's valuation. So you could have a really crappy appraisal that comes in
Agreed.
low.
Agreed. Well, you know what I'm saying? though?
Right.
It's like, I'm gonna give you this much fully guaranteed and feel comfortable in it because you know there's a waiver.
The other point I wanted to make about waivers in
Hope it doesn't
general,
change.
a lot of the times I'm putting as a loan officer, if the appraisal waiver information is within the contract, I'll ask the agent to put it on an addendum and not send it to me until after I order the appraisal. The reason is because when I'm sending that in with the appraisal request, the appraiser's seeing that and they're like, oh shoot, this value is not here. And then they like automatically have that like kind of red light in their head. And they're like, okay, well, we can bring it in and they got a waiver or they've got a guarantee and the buyer has the money. So I always like I'm like, just leave it off and, you know, obviously have it signed by all parties. Just don't send it to me until later. And we don't really even need it. So we wouldn't need it unless it like came into play. I don't know if we have. Oh,
It's come up as a question in a lot of our things. Do we send it to the lender or don't send it?
Yeah.
So I'm glad you.
we don't need it. I mean, if like it does come in short and it comes into play, obviously send it over and we'll send an underwriting and then we just have to verify the funds and everything, but we wouldn't necessarily need it unless we needed to use it or if the value came in short. Where is that link? I just wanted to, how do I, is that, okay, how do I do this? I just want to put this on the screen. I just want to show this on the screen really quick. And you guys already have all this, right? Okay.
Yeah, we've worked on this link before. Wow, that's a bad picture. You gotta end the slideshow.
Will you go back to it really quick and not end it yet? Just, no, don't do that. Never mind. End it.
You sure?
Yes, I'll just send it an email. It's embarrassing. It was like a rough day and I was like, I just need to send this video out so that people stop asking me. And then I was like sitting in the corner. It was like my office, it was like dark and I'm like, okay, so say someone buys like a $300,000 house in Livonia with Livonia schools. So I just put in 100,000, of course, it's Wayne County, so it's all the way at the bottom here. And then this is going to matter too. You're going to pick the school district. So I live in the city of South Lyon and South Lyon Township or Lyon Township, the taxes are drastically different. So that's a huge part if someone's
Livonia, Clarensville, and Livonia Public Schools. big
Right.
difference in their taxes.
But knowing like South Lyon borders of the city versus the township is like drastic,
with
and it's all the same schools
Because you've
though.
got Novi with Northville schools, Novi schools, South Lyon schools,
Right.
and Walled Lake schools.
Yeah.
All
Right.
in the city of Novi.
So just putting in here, like half the sales price is typical rule of thumb, Livonia schools, Livonia city, this is the millage in 2019, approximate taxes, homestead and non-homestead. And then giving them this, explaining how to do it with I have like a YouTube video that I did it, explaining how to do it and giving them this website, you've done your job as far as like education wise and property taxes and future property taxes,
Right.
which is going to be a huge problem in the next couple of years. People are going to be like, what is going on with my property taxes? Why do I have an escrow shortage? Because if they didn't use someone that explained this to them, it's going to be a drastic difference. So especially people on like a fixed income, like you're in a fixed income.
Yeah, definitely. I just want to make a comment. It is good to call the city assessor too, or have them call the city assessor to make sure
That the
that
millage
the
is
property
correct.
is correct with what's on the MLS listing as
Yeah,
well,
right.
because of different school districts. They might have it input as one thing and turn
So-
out to be another.
Here's the thing, I mean, I've talked about this lately quite a bit, and Pete talks about this all the time. The MLS is not a contract. It's just an advertisement. What's on the MLS doesn't mean anything.
That's why
It's
there's-
what's on the PA. And it's like with anything else, garbage in, garbage out. If I put on there that the garage is detached and it's attached, so what? You know what I'm saying?
Yeah. it
So,
doesn't make a difference.
just because the MLS says 3 bedrooms, it's actually 4 bedrooms, so what?
Right.
I mean,
So-
you get pissed that they're sloppy and they're not doing a good job putting their info in, but the MLS doesn't matter in that respect.
And I had an interesting situation with that, such as Ypsilanti Township, major difference in taxes.
Oh yeah.
That-
And property was listed with Ypsilanti Township address, and then you pull up the PRD and then it says Ypsilanti City.
City, which is
But then
nice.
it's Ypsilanti City Schools. So what I do, I called the assessor because I'm like, oh man, I just noticed that my buyer's not going to be able to afford this with the taxes. City assessor said, actually, it's Willow Run School District. It's
It's
totally
not
different.
even.
And it is a township. Like they
Yeah.
verified, it was a completely different number from anything
Yeah.
we were looking at running.
The other thing that you're gonna have like the next couple of months here is, July tax bills are gonna come out. If you have like a flipper or someone that just bought this house last year and you've got, say, $2,000 for the summer tax bill on the PRD, and then it gets assessed, the bill comes out, it's not
It's not
updating.
homestead.
So whatever the listing ticket's showing is not the actual, and you're not getting that until title work's pulled. So I had this happen.
18% higher.
Oh, well, and if they bought it as a flip and it was like a rundown house or
Right.
something, I had this it was end of July. The house was listed mid-June. We went into contract just before the 1st of July. The title work came out mid-July and I was like, oh my God, the taxes went from like, I think it was like $3,000 a year to like $7,000 in the summer. So what happens is the tax prorations are now going to reflect what the seller had to pay, the $7,000, and that's in the contract. You're paying the seller back for tax prorations. Well, if you're looking at the listing ticket that doesn't update the taxes as the taxes get updated. So just be aware of July tax bills, because there's going to be a lot of situations that the taxes are going to be higher than 2020 July.
Like we've passed it now, but if you have sellers that closed in April or May, it's like, you better get into the township and turn in that property, either like the rescission
Homestead,
or the
yeah.
homestead exemption before June 1st.
Right.
Do it now, or you're screwed until December.
Right, and that's a good touch too. Like if you have those, I mean, call those people, just make an extra touch. Do you know anyone that's buying, selling, or what is it, or investing in real estate? I
Yeah,
don't
was
know.
it-
I've been to like a million bolts, so I'm like,
So it's almost 12:15.
yep, sorry.
Does anybody have specific, like a question? If you have a specific personal situation, you can ask her on the side, but any kind of like procedural myth you want to bust,
Sure.
something like that?
One of the big ones always is about inspections and appraisals. Are there specific items, like a FHA item, like safety related
Is there
stuff?
anything listed anywhere?
Is there a list? Yeah, there a list or
Like,
something?
how do they
Like a
train these
checkpoint?
appraisers to look for something?
So they've been like a little less
Lax.
lax than they have been years ago. But what I'm seeing, like we had one come back,
What type of loan are we talking?
it was a VA, but I looked at the picture, I'm like, why didn't you fix this? It was like literally a crack in the window and it was like open. Like you should have known this. And the buyer was the agent too. So handrails, steps, they're gonna do like distance steps. I can like come up with a list and send it out too.
But is there
Yeah.
anything written?
I'll look to see. I'm not sure exactly if
great
the
if there
VA
was
has it in their handbook.
Yeah, I mean, it's basically like you said, handrails.
Exposed wire.
GFIs,
Oh.
peeling paint, handrails, like if you're like steps on your front porch or like a huge drop or something
Right,
without a
like the
handrail.
rise and the-
Right, like rotting wood, even on like detached garages. Like, so I have like a lot of people that are like, well, it's on the detached garage, it's not the house. I'm like, it's still part of the property.
Smoke detectors and every
Smoke
resident
detectors,
line.
GFIs, and then they're gonna check for running water, obviously. And then they're also gonna check like drastic cracks in like the cement.
Fun.
Or cement.
They do like I had that VA one too, was the mortar and stuff around the brick patio was starting to fall off. So-
Mhm.
But we fixed it before the guy showed up.
Right.
Just the,
There's a
Tuck
patch.
pointing and stuff.
what's it called? Tuck
Tuck pointing,
I was
yeah.
gonna say nip tuck, but that's.
A lot of the times though too, like you're gonna know ahead of time if it's in a city that needs a certificate of occupancy, you're gonna have that, the seller's gonna have that list to begin with. And if they already have to do those items,
That's another
accepting a
point.
VA offer is
If
not
you're
that
like
big of
in
a deal.
Westland or somewhere that requires a C of O, you can probably get rid of a lot of the stuff that a VA or FHA would pick up
Right.
from this.
Well, I guess like the seller or listening to it don't have to really worry as much, knowing that they already have to do the safety items anyways. I mean, I know in Westland, because I used to live in Westland, it was nuts. They had like every like little spigot on the outside of the house had to have a certain spigot. I'm like, for what? And then we ended up
Yeah.
taking them off anyways because they were paying.
Yeah.
Yeah.
Do they care about peeling paint if it's a newer house?
Yes.
They still do.
Yeah, even if
though
it's
gonna
after
be
the
lead.
1970, whatever, lead.
Right.
That's a good question.
So
There's a
can,
lead-based paint disclosure, but you also cannot have.
Right.
Mhm.
can the vet pay for the repairs noted by the
That was the
VA
question.
inspection?
Yes, as long as it's in the contract.
And does that vary then by lender?
It probably does.
Okay.
Does it depend on that origination fee as well?
No.
Okay.
No, because that's not a cost, it would just be like
Okay.
a repair. The cost
So you
depends
really
on
have
the
to do
original,
your homework with the lender before you
Yeah.
take, or when you take on a vehicle.
or as a
Can-
listing too.
Can they not do the repair before close and get concessions if it's like
It's
Put it in
explicitly
escrow?
written that that's what it's
So-
for?
Yes, but it again depends on the lender because some will be doing a repair escrow and some won't. And then you also have to go through the steps of getting the bid. It can't be like, it has to be from like an actual contractor. It can't be like, okay, I'm gonna put in the window
Right.
myself. We just had this. So
Okay.
it was like so messed up because COVID delayed the window coming in.
Oh,
And so we got all of the, it was just funny because we did all of the work to get to the escrow repair. And then they, like, the Monday rolls around and they're like, we got the window and it's in. I'm like, really?
Yeah.
Like, why did we go through all this? But they weren't sure because, anyway,
Yeah.
continuing delay. So we ended up not having to do it. But it does depend on the lender because as a broker, I have some lenders that will do an escrow
Right.
repair and some that won't.
Okay. Is there anything about VA getting concessions, seller concessions?
4%.
4%?
is the max?
Mhm. Yeah. And then, but then the lender can also cover costs too.
Mm-hmm.
So, and you can actually include like liabilities to be paid off at closing
What
too.
do you mean?
Like if they needed to pay off a
There's a
car
lien or something?
no, if the buyer needed to pay off a car to qualify for a house,
Yeah.
they can include it to be paid off at closing.
Just
Does
so
it
they
get-
reduce
does it
their
get
debt to
rolled
income.
into their mortgage?
No, like it could just be included to be paid by like concessions or lender credits.
Interesting. But could it be rolled into the mortgage?
No.
Okay.
Well, in essence, though, really kind of it is
Mhm.
because either it's going to the,
Well, by that I meant like, we're gonna ask
Yeah.
for a higher price
right,
of.
If it
say,
appraises.
we have an $8,000.
right.
Yeah, if it
car
appraises.
payment. Can we add $8,000 to this?
Well, the
offer?
seller would be netting
We're just asking. if it's
8,000
allowed.
more. No, it would have to be covered by concessions or a lender credit.
So it has to be.
Yeah, and also like look into lender credit. So
That's
if you have a
crazy.
client that's like short
I've
with
heard
cash
those
to
stories,
close, the
too.
rates are really low. If they're willing to take a higher rate, because that's how a lender's gonna give a credit, to take a higher rate to get concessions or a lender credit, that might be what you need to do instead of trying to ask for concessions. So, I mean, don't be like worried about asking for a lender to do that because it's not like it's coming out of their pocket. They would just increase the price of the rate to cover the cost.
Right, I mean, the buyer has to be approved.
Well, that's what I mean, but if they're on their fifth house getting rejected because they're asking for concessions and they need concessions,
right.
then they're gonna have to take a higher rate to be able to get the house.
'Cause then
So,
the
and then,
conditions come
but the
from-
seller doesn't know that the lender's giving a credit, so it's not
Right,
like they,
doesn't matter.
yeah.
Interesting. Any other questions?
On the note with the appraisal guarantee too, like say someone wants to put 20% down, they're like, I'm gonna put 20% down, I'm adamant to put 20% down, I wanna do a $20,000 appraisal guarantee. Your lender should be coaching them on the fact that if they put 10% down instead of 20, if the value does come in short, mortgage insurance is usually very low. So like, here's a loan estimate, if the value comes in short at 10% down versus 20% ideal situation that you wanna handle, but if you want this house bad enough, put 10% down, do the appraisal guarantee, and you're still bringing the same cash to close.
Right.
So just kind of like,
Give them information on different scenarios. so they
Right.
don't freak out
the
at the
different
moment.
scenarios with the,
Right.
I think a lot of people just get so overwhelmed with the appraisal guarantee, thinking that they're gonna pay so much more for the house and
Yeah.
not understanding that appraiser is one person's valuation and you can get 5 and they're all gonna be different is a little bit overwhelming to clients.
Yeah.
So, yeah.
So.
Question,
Go ahead.
thank you. Really quick, hi Kelly. This is-
Hi.
I have a question about the surviving spouse. Do they have the same benefits that we just discussed?
Yes.
Okay.
Great question. But do they need to have that eligibility letter of their deceased?
Mhm.
That's what I was wondering.
Yep. And the DD 214, make sure that they have those. I have this one lady that she's a surviving ex-spouse. She's like, can I use my ex-husband? I'm like, no.
No.
That's
But
hilarious.
children, surviving children?
No. Spouse.
Ooh, That
Yep.
sucks.
Mhm.
Well, because what if
It's not a Ford
there's
car
no
plan.
spouse and it's just the kid, you know, I mean, they would have gotten help from a parent, you know. Anyway, okay,
Yep, no, only spouse.
okay.
Interest rate, if they lower.
Oh, yeah.
How much?
I have a VA Earl right now I'm doing, which is a streamline at 2.25 on a 30-year.
Wow.
Yeah, one do
So-
that too. But
So drastically different and no mortgage insurance.
Right, regardless
Mhm.
of.
Right.
Yeah.
All right, so I hope for me, it was informative. Oh, you got a question?
Yeah,
Yes, go ahead.
Does the VA loans cover investment properties or is just?
Just home, just their primary.
Right.
Mhm.
Because they want to put the vet in home for his family.
Could they do a multi-unit though, as a like if they wanted,
I mean, I think a 2-family. I'm gonna check on that. I have not had one,
okay.
but I'm just writing it down.
I was just thinking if the vet wanted to buy an investment property, he lives in the unit. That's a good question, Hope.
Yeah, because if
He
they
lives in one unit,
one
but he
and
lives out the other.
rent the
He
other
still get
one.
a VA loan for that.
Or has a family member living in.
Yeah, I just wrote it down because I need to figure out about that and the seller paying the well and septic inspection.
I learned a lot.
Yeah.
Yeah.
Thank you,
guys
Kelly.
did too.
Yeah, thank you.
Awesome.
Yeah, you're welcome. I have these little booklets too, if anyone wants to take those.
And did you say you were gonna
We're realtors, we always want this.
Yeah.
I have more, but I didn't put the little things in them. But it's just kind of fun to like hand to a client. I don't know.
Did you say you were gonna email the?
I'll email the
Do you
PowerPoint.
need our emails jotted
Yeah,
down?
do you have everyone or no, Sharon?
I do. Whoops. I
Oh.
already gave you one.
Holy
Sorry.
ravioli. Yeah.
So sometimes it's good, like if you have like there's like 3 parts to it, I'll bring in
Let me
more
get
of
a
those
piece of
like little
paper.
sleeves. Somehow I like bring it out.
And you guys can all pass it around.
But it's like if you're going to see like 4 or 5 houses in one day. I mean, I just remember when I went to look, I'm like, what was the one with the
Yeah.
terrible green carpet? I'm like, what house was that? And my
Yeah.
husband's like, it was that one. I'm like, no, it wasn't. I'm like, we're like arguing about it.
yeah,
Because no one took the picture of the terrible green
Right.
carpet in that house.
Yeah.
So it's easier to like jot down notes and stuff.
I see that there's is that where
All things real estate.
Lemons came from?
Yeah, all things real estate is like a cool.
This is really awesome.
Yeah.
So I've bought like boxes of them. So they're fun. So typically what I'll do, where's like my little box thing?
It's on the
I love
window,
that.
so.
Oh, so
I
I'm
might
like
invest in a
pretty
bunch of
like
those.
Yeah.
consistent with like my marketing and stuff, I guess, and like fun things so that like memorable stuff. So like typically what happens, like when number one, when I pre-approve someone, I have a folder that I like mail them. Like I'm really into mail because no one mails anything anymore. So I have a folder that has a pre-approval, like the roadmap, do's and don'ts, whatever. And then I send that book in with the agent's card and my card. And then if they like want an inspector or something's card, because there's 3 spots. Once they get an offer accepted, I send this and then I have like my packaging tape on it, but I'll send like this. And it's like, and I just say like, congratulations, it's time to pack or whatever with some pens.
Nice
in
little
them.
touch.
I have so many of these koozies, so I've just been throwing them in because like, oh my gosh, I have boxes of koozies for some reason. So I'll send this and then like, so I basically have an assembly line of these and I just like, I have my packaging tape. My processor sends them as soon as an offer is accepted. That way they're getting mail and it's kind of like an extra touch. Like I understand like how online and like everyone's shopping and stuff. They tend to like slow down on like the
So let me
online
tell you,
shopping.
did you give me, where did I get the book? I got the book from Rob when he was giving away books. Was it for family reunion?
Oh, it was bold probably. Every time I would do bold, like if Molly or someone like said like a list of books, I would like just buy the book.
I know we were at Genetti's when we got the little bags with the books.
Oh, that was me, yeah.
So, but the book, oh yeah, so it was a book about Disney,
Someone else.
about Disney.
Oh, no, he gave that one out.
Yeah.
But yeah.
It was about Disney's customer service, right? And the Disney model. And there's a thing that just stuck out for me, which was the future of business is the experience. You can get the service anywhere, right? And that's what Gary Cohen was talking about.
And it's
You can
expected.
go on Zillow, and it's expected. It's like, you should be doing and go in all of this stuff for me. That's what I'm paying you for. Yeah. But when you're getting the little box and you're getting the little handwritten card, and you get the extra little phone call, it's the experience, right? Because people go to Disney because they feel good when they go there.
Yeah.
It's not because they haven't been and walked through the Magic Kingdom a bajillion times, right? It's how it makes you feel. And those little touches, everybody gets all excited when she shows up and there's like a little wrapped box outside my
Oh my
door,
God.
like, Kelly gave me ice cream.
I'll be here
You know?
later. I'll be back later today because I'm
Right.
like the problem is when I do it, I'm like, oh, I want to do this, and then they turn out to be these big, heavy items, and I'm like, what did I do this? Like I should have got something smaller.
Well, did I tell you that, like, I'm doing,
Oh, are you doing the
something
ice
like
cream
that?
one?
no,
I'm
not the
ripping
ice cream.
off the ice
Actually, I
cream
took a
one.
picture. I bought a bunch of little black gift bags,
Uh-huh.
a bottle of Sweet Baby Ray's,
Oh, good. Oh
the
yeah, you did
silicone
tell me.
barbecue brush, and you gave me the exit, the little red and white checkered
Yeah.
Napkins?
like hot dog
Oh,
wrappers,
yeah,
you know,
yeah,
like
that's
you
fun.
just-
Oh,
as
yeah.
tissue.
For
And
fourth.
it's just gonna be a Popeye, and I'm gonna give out,
Yeah,
but it's that.
it's a
thing.
lot of work, but
Asking
that's like
referrals,
fun to
asking them
me.
To post it,
Yeah, like it's fun for me because I think like when my big kids were in preschool,
and
like
I've never done
that was like I was always into the marketing and like that type of thing. So like it's giving me some sort of balance in this
Yeah.
business.
I started,
But,
like, stuffing them in my
Mix it
bag.
creative with the
Yeah,
numbers.
the Popeye things is fun for me. So like that's a fun part of what I do.
Right.
But I was gonna say something else.
Another quick question. I'll be in the office. Will there be a place where we can pick up the books that you guys are referencing?
Yes, and I'll bring back more because I'm coming back this afternoon with my 4th of
Yeah,
July
I'll be back
Popeye.
here.
Yeah, zoom in.
Where should I go? Look for front desk or?
Yep, I'll drop some off at the front desk. Hope.
Okay, and I'll be calling you because
Okay, yeah, I did talk to someone yesterday.
okay, great.
The other, Veterans Day is coming up
Oh.
soon.
Yeah.
If you go to Dollar Tree, they have like little cards. They're like just a flag on the front. I always like grab a few every time I go to the Dollar Tree and I have like packages of them because they're, I don't know, 10 for $1. So every Veterans Day, I send out a $5 Starbucks card or whatever. Usually Starbucks has like one where it's like an actual Veterans Day gift card and they give back something to some veteran group. So
That's pretty awesome.
every year, I'm like very consistent with that for like the last 5 or 6 years. And they're expecting, like all of my past clients, everyone that I have pre-approved that's with a VA loan gets a card. So I have, like, I can start doing it now and then I'll, you know, in my every,
Right.
and then I just have them ready to go. So just being like consistent with these kind of things is.
Well, like, I also want to do something that and you guys can leave, we're all just yapping.
You can leave.
Well, I don't want
I'm
to
just
hold anybody
kidding.
up, if you have things going on.
Yeah.
You said that you have a stack of cards with like little $5 coffee gift
Oh,
cards. Like,
yeah, I
need
should
to
have
do
brought that.
Because then when somebody sends a referral, you just grab it off your desk, send it as a thank you, and you're done. Like,
So
I've got people I want to do that.
if
too,
I
that
have, like,
the card. and
yeah,
they
anytime that
stamp
someone
on it.
refers,
You know.
you're welcome. We'll see you later. So anytime that someone refers, I'm like, I automatically text message my assistant. I'm like, write this down. Like, we have to remember. And like my processing worksheet that we send in, it says like referral from, and I try to track where everything comes from.
Yeah. Anyway,
Do you have a sample, whatever, it's
Bum
called,
Bum.
video
Yeah.
of going over the like lender statement?
Yeah.
Can you send that to us?
because you want to learn it, or you want to copy it.
No,
Either
I
way,
just
you
want to
can-
learn
yeah.
Yeah, like,
it,
either way,
you
it's
know? I feel
Right, you
like,
can learn
I feel like a lot of times clients come to us with
They do.
questions that we should
Right.
That's why I included
refer
that.
to.
Well,
Like,
the
eventually,
If
basics,
you
know.
understand what their process and what they're gonna see is, you can better walk them through it.
It's like,
Thank you, guys.
Bye.
Awesome, Sharon. Thank you.
I'm signing off too. Have a great day.
you too. Thank
Did
you. I'll
everybody
drop it
write
off
their
this
names
afternoon.
down?
Thanks.
No, sorry. You dropped the ball.
Aren't these the comfiest? Oh, sorry.
yeah, but do yours make a little bit of a squishy
Who are you
sound?
looking at?
Are they from
I'm
Costco?
okay with-
Yes.
I got those.
I
They're
wore
in
them-
brown.
I wore
It was
them all
brown
day
ones
at
too.
Cedar Point and they were fine.
Really?
At Cedar Point?
I almost wore
Yeah.
them
Oh my
today.
God.
But mine were brown and I have a black dress. That's why I
Yeah,
did it.
I did.
People are
I
brown
took
black.
a spare
I
set
know.
just in case, but I wore them all day.
That's funny.
So I got,
Hi.
so I got a question, Kelly. So I'm in the middle of a FHA, representing the seller,
Okay.
accepted an FHA offer. They didn't want any concessions. They had up to $500 for the repairs, did the inspection. What is so the FHA, they
The
don't
reason I
don't
asked
pull the
that
panel,
question
they just
about the.
walk through and they look for health and safety. Right.
It's done, gone.
So,
this
because
is a
I'm,
year
you know,
ago.
nuts before some
I
of the,
had
Did their
a VA
inspection come back with the
No.
electrical issues?
yeah.
And
And
The appraiser noted it?
No, appraisal hasn't happened yet.
Oh,
None
Okay,
of this
so,
was
because we're still working, the inspection was just done, we just got the results yesterday.
Didn't go through all of that.
One thing
Came
though,
back and said,
buyer
it's a
brought-
low,
and I thought it was
it's low,
like,
and
you
the
know,
seller was like,
cracks in
well,
the
I'm not going
cement,
low.
Uh-huh.
which I didn't recall.
they're-
It's the
they wanted
brick,
to
Okay.
mutually
you know, like the,
yeah,
the,
mortar.
tuck point in the brick. The FHA doesn't look at that, do they?
They shouldn't. I mean,
Yeah.
it's Michigan.
That
But
goes
as
back
we're
to
sitting
what's
here,
the
it
local
hit me,
record.
there's freaking peeling paint
Because I was like,
off the garage.
Yeah. Right. Your buyer?
Do you know how many
It was my
times that
buyer.
I've noticed that,
Well,
like, or
yeah,
it's come up
yeah.
and then I've like literally just drove over there with my bucket
Yeah.
and like
Yeah, I
scraped and
know.
painted.
and actually was.
I mean,
just
I want, one time I
Yeah, we'll
had,
never make,
She
we'll
was
never
just saying
match
the
the
same
paint,
thing,
because I
like-
have no idea what the heck color
But
it
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 is.
honestly doesn't even matter, it's just
But
do it to
hers
get it through
went
inspection.
Because,
It
and
went through
because
that
when I,
whole process.
when I talked to the sellers, we didn't have FHA and VA
Yeah.
originally.
Right.
We weren't getting any offers.
Right.
So
So you had to open it up.
let's just open it up. We did. The best offer that came in was FHA. I'm like,
Whatever.
I said, this is, you know, I said, the house is in really good shape. I mean, it's old and dated, but.
So, now I know.
Or maybe
and
just,
they-
oh,
And
thank
they,
you.
and they came back with.
Maybe just wait till the appraisal comes back. See if
Oh, yeah, I worked through the inspection first.
still.
Well, that was the other thing, because I had, and I told him, I said, listen, I had a house, same city,
Mhm.
accepted an FHA offer. And I'm like, you know, the driveway wasn't in the best shape.
I'm
I
like,
said,
drive onto the driveway and park.
No, I said,